Welcome to the Anchor Your Retirement podcast. I am your slightly congested host, Barbara Gullen, hanging out with my equally maybe congested co-host,
It's
Tony
true.
Shore. Happy spring.
Yeah, exactly. Spring is in the air. I've got some allergies going on, and for some reason I'm in my studio, which is in the basement today,
Mm-hmm.
at my home studio, and it's freezing down here. And what's happened is it's really warming up for spring
Yes.
weather, and the sun is coming in upstairs, and that's where the thermostat is because we live in a
Uh-huh.
split level home. So here's my recommendation to our listeners today, just right off the top of the show: do not buy a split level home. The air,
Okay.
I don't like split levels. It's always freezing in the basement and hot upstairs,
But they're
always.
really good for your butt because you're climbing the stairs a lot.
Yes,
I
but
just said that. Sorry.
I'm getting to the age where my wife and I, our next home, we've been here 28 years, Barb. And
Congratulations.
so what we're going to do is we're going to get a one level home, but finding a one level home with everything on one level is not easy
I
because
believe
they
it.
don't build them, because they're more expensive to build, because
Right.
the bigger your foundation
Bigger
is.
foundation,
Yeah.
more concrete, more
Building
expensive.
up is cheaper than building out. I found that out because I didn't know why. I'm like, why every new housing development are like 3-level homes,
Mhm.
like 3 stories, and they said because it's people want big and they can sell them for more. There's more markup and it's cheaper to build up than it is out.
That makes sense.
Yeah.
I this morning down here in Kansas City, we're giving Dorothy a run for her money with some of the winds we're going to have
Ooh.
here. They're not
Uh-oh.
predicting tornadoes, but we have
Good.
very strong winds coming through later this afternoon. They're supposed to be like at low level hurricane speeds or something like that. But it's already breezy this morning, and I walked my dog, and things are starting to bud and pollinate down here, but I think it was just dusty as I'll get out. So
Yeah.
my poor little
Well,
nose has not stopped running.
you and your dog, I'm glad you didn't get blown away. That's
Well,
for sure.
there's a little bit more to me than there used to be, so therefore I anchor well in breezy conditions.
No. When people see me on camera, my line, Barb. I tell everyone the camera adds 100 pounds. So when they're looking at me right now on the video, I just want them to keep in mind the camera adds that
They have
extra
no
100 pounds.
idea that you're an Adonis in person, right?
Right, right. A perfect physical specimen. I've said it before, Barb. I'll say it again. People ask me, "How do you do it, Tony?" And I
I
say 2
know.
words: diet and exercise,
There you go.
and a
There you
whole lot of pizza.
Well, and for those of you that have been paying attention to the stock market this week,
I don't know
that's
how you
been
could
like
miss it.
that's been like a treadmill on like high intensity interval training hills
Right.
level whatever, a level I've
Right.
never seen. Um it's been very very bipolar.
Yeah.
And here yesterday the S&P 500 went into correction territory,
Yep.
which means we're down around 10% from our highs.
Yep. Yep.
And I have been fielding calls from people and emails saying, "Do we need to make any changes to my portfolio? What do we do? Chicken Little, the sky is falling."
Yeah. They watch the
And
news. That's the problem.
not only do they watch the news, but so many people filter things through social media right now
Mm.
where
And
you have
that's worse. Yeah.
right. I mean, you have people offering up unqualified, unsubstantiated opinions.
Right.
And when it fits the narrative in our head, or when it's somebody that we validate and trust and have given credibility to for some reason, those words carry weight, even when there might not be anything behind them to substantiate what's being said.
Yeah, that's the problem, and you've got to watch out where your news sources come from.
Mhm.
Don't believe everything you see or hear or read. And the media is going to, I mean, dirty laundry sells, right?
It does. It
Clean laundry
does.
does not. So the bad news is going to lead,
And
right?
even though I am not a devotee of the zodiac or all of that, let's throw a full moon and a lunar eclipse on it just for grins and giggles. What do you
Yeah,
think?
the blood red moon that we had last
Yes.
night. I went out and looked at it. It was amazing.
Good for you. I was
Yeah.
sleeping.
It was bright. It was
It was
brighter.
very bright last night as it was coming up. That's for
Yeah.
sure.
Yeah, it was. Well, the stock market, Barb, and you've talked about this many times on the show before, but I
Mhm.
wanted to ask you,
Sure.
and I know your clients, they don't need to worry. You still get calls saying, hey, is there anything we should be doing? But I know that when you come up with plans for people,
Mhm.
a 10% stock market drop is not the end of the world or things to worry about because if you're properly allocated, that's not
Mhm.
going to be a problem and the markets bounce back, right?
Yeah, this happens every year or so.
Yeah.
And it's for one reason or another. Unfortunately, we live in a culture where bad news gets more attention than good news does.
Yeah.
And in the world of the 24-hour news cycle, which, we can blame Ted Turner for that
Yep. Yep.
and Rupert Murdoch to a degree.
Yes. Those two
Uh,
guys.
yes. Whoever thought that a cable news network that was devoted strictly to news was going to be a great thing? Um, anyway, rabbit trail there. But these intra-year corrections happen all the time in the market.
They do.
And for those of you that are still working, I want to remind you that as you are investing in your 401k, your 403b, your thrift savings plan, when we have pullbacks like this in the market, you get to go in and buy stuff on sale.
Yeah. That's good.
Yeah.
Uh, its stocks are on sale. So, especially for those then, Barb, that are in their working years still, all our
Mhm.
listeners and viewers who are still at their jobs, getting
Mhm.
a regular paycheck, stock market corrections, especially a 10% correction, that's a good thing
It can
because
really work to your advantage, and although I
because
am an advisor, I may not be your advisor, Mr. or Mrs. Listener. So
yeah,
please don't take this as gospel advice. If you've
right.
got questions, talk to your advisor or find a fiduciary, somebody who has your best interests at heart, and run your retirement plan by them. Let them do an analysis on the different funds that are available. Make sure that you've got everything invested in what aligns with your risk.
Right.
But if you've got a runway before retirement, if you've got 5, 10, 20 years, this is a blip on the radar.
Yep.
You know,
A
the
blip on the radar.
the market is going to stabilize over time. Over time, it has always trended up. And right now, what we see is a lot of correction in the market because of the tariffs that are being imposed, the trade war that is heating up because of tariffs being imposed, and people preying on the fear mongering right now,
Yeah.
plain and simple. That being said, you might have some questions about whether you need to stabilize retirement and what you can do to try to take some of, to instead of making it, gosh, I'm going to use Worlds of Fun roller coaster vernacular here. Worlds of Fun is an amusement park that has
Sure.
been here forever.
Yep.
And I'm going to go with old analogies because it's been probably 20 years since I've been there. And although this roller coaster doesn't exist anymore, go from the Orient Express to, I don't know, maybe the Zambezi Zinger, which is not quite as volatile a roller coaster,
Sure.
or one that's in the kids section where it's
The
just
kiddie coaster.
the
Yeah.
kiddie coasters.
It,
You
it's
know,
going from the big roller coaster with the
right,
huge drops to the kiddie
right,
coaster. Yeah.
right. And the Orient Express actually like went upside down 4 times.
That's awesome.
Yeah, well, says you.
Well,
I
when I was
believe
young, it was
Yeah,
awesome.
I believe my words to my father at the top of the hill before you take that first big plunge
Was it a
was
swear
something.
word?
No, because I was 12. but it was something to the effect of, "We're going to die."
Yes,
So
I think I said that too. We're gonna die.
we're
Yeah, I
gonna
said that
die.
too. Yeah, yeah, that reminds me there was a place in Iowa that we would from Minnesota drive down called
Uh-huh.
Arnold's Park in Spirit Lake, Iowa,
Okay.
in Okoboji, and Arnold's Park was there forever since I was a little kid, and they had the same old wooden roller coaster. It had been there. I mean, that thing was old, and
I
it would
thought you were gonna
creak.
talk about Adventureland
It
outside of
would
Des Moines.
creak, and the cars would and I
Mhm.
literally thought every time we were on that thing was gonna just go off the rails.
Yep, our wooden roller coaster out here is shut down for the season so that they can go in and
Yeah. They
reinforce it.
eventually closed it down because it did break and someone got hurt.
Ugh,
But then they rebuilt it, and I don't know if it's still going today or not. I
yeah.
think they completely tore it down and rebuilt it. But,
But
the
getting
old wooden roller
retirement
coaster, yeah. I
getting back
mean,
to retirement. If you are 100% invested in the stock market and you are approaching retirement, you're within that 5-year window, you're over 59 and a half.
yep.
It's probably time to reassess and rebalance.
Yeah. And so that's what you do. So, Barb, what can our listeners and viewers out there do to stabilize their retirement? You mentioned rebalance. What does that
Right.
entail? Like when somebody comes in, how do you stabilize their retirement plans or accounts?
The first thing we're going to do is have them take a risk tolerance quiz, or we call it the COMRA, which is short for Color of Money Risk Analysis.
Okay.
We've talked about your money having different colors here before. Red money is money that's invested in the market that is going to be volatile and go up and down with the
100% at risk. Yep.
yes. Green money is money sitting in a bank account or in some sort of a vehicle or tool where we're not losing principal unless we take money out.
So principal protected money, where what you
Right,
put in is always going to be there. You're not going to lose,
right.
but the growth potential isn't the same.
It isn't. And
Right.
when we're putting money in a tool like that, we want to look for something that will have the potential to at least keep up with inflation,
Yep.
maybe outpace it a little bit. But where we like to have a lot of our clients is in the yellow money. If you're looking at a stoplight, this is in between the red and the green. And it's where we're going to have money that is invested in the market, but it's being actively managed so that a human being can look at the circumstances and the situation and be proactive about where the money is going, and you won't see the same highs as in a total index fund, but you more importantly you won't see the same lows. And we also have access to other portfolios like our buffered index portfolios or dual directional portfolios that allow us to offer some level of principal protection even
Yeah.
while the money is in the market per se.
Yeah, those buffered, portfolios, that's a really, great thing, and they've really improved some of the offerings, some of the companies out there and some of the offerings you can get are really impressive.
They are. They are,
Yeah.
and very helpful.
Yeah, and, I know that, Gradient Investments, that's been one of their more popular portfolios, and, of course, now everybody's looking at it. When the
Of
market
course
drops
they are.
10%, everybody's like, "Can I still get in that buffered
Mhm.
portfolio where there's no my downside is really limited or not at all, and I still get to participate in a lot of the upside?" So those are great. I know those are very popular, but there are different tools, whether it's in the stock market or an insurance product or
Mhm.
at a bank. There are different tools you can utilize, and you need to work with an advisor like yourself, Barb, who
Mhm.
is going to look at all the options out there and see what your situation, what's best suited for that, right?
Very true. Very true. Because another thing that we can look at to stabilize or balance out your risk a little bit is something like a fixed indexed annuity. But
Oh,
even all
yep.
fixed indexed annuities are not created equally. Some of them give you some upfront money that we call a bonus to help give you a push in the right direction if you're making up for lost time. Other ones will offer an income rider where we're creating basically your own kind of private pension if
Hmm.
you don't have a pension available, where we know you're going to get a dollar amount every month for the rest of your life, even if you end up exhausting the value, all of the money that you put in. They have a contractual obligation if you have longevity on your side. If the account goes to zero and you're 80 and you live to 93, they will continue to pay you for those 13 years
Wow.
because that's what you agreed to with the
Yeah.
income rider. Other ones, other fixed indexed annuities, we're going to look at to try to grow the value of the account. We're going to look at it being accumulation focused rather than income focused. But all of these are things that we need to look at, not from the lens of we have all these products to offer, but what do you, the consumer, the retiree, need to round out your portfolio to give you the risk level that you're aligning with at
You're
this time.
comfortable
And
with. Yeah.
risk tolerance changes from year to year and from your different seasons of life. So, if it's been a while since you've taken a risk tolerance, go back to your advisor and do that again.
Yeah.
Um, because as your circumstances change, your tolerance for risk and appreciation for that risk will also change.
Yep.
It's not a one size fits all kind of thing. And it is important that you get advice from somebody who looks at all aspects. I met with clients last week that had gone to another person to look at funding college and how they were going to pay for that. And this person, who was not a fiduciary several years ago, talked them into some products that really weren't suitable for achieving the end goal, took them out of some products that were designed for education costs and put them into something that now they are going to have to pay penalties. They are going to have to pay more in taxes than they would have. Um, but the insurance agent that sold them these products offered what they could sell because that's what they had the license for.
Hmm.
And this person was probably taught that way and didn't understand that there's a whole big world out there to finance. Um, but created a mess for my clients that we're now trying to go in and clean up and minimize the damage long term
Yeah.
because of the choices that they made.
Yeah. Yeah, that's rough, and it is interesting because some of the big box companies, they have their own products, and they just pick from our products,
Mhm.
and here's what we offer. But as an independent fiduciary, you look at everybody and have access to all these different things and say, well, no, that's not the best deal for you or in your best interest. This is, or maybe you're younger and not in retirement yet. You need to keep it more in growth and just on the investment side, and you don't need an annuity, or you don't need this, or you're in the wrong type of insurance. You're overinsured, you're underinsured. It
Mhm.
is important to work with a financial professional who can really personalize it, and that's why
I
we
have
don't
the
get into.
privilege of
Yes.
going to the open market and looking at what's available.
Yeah.
9 times out of 10, if you tell me what big box broker you've been with,
Yeah.
I'll tell you what fund family you're invested in before I even look at a statement.
Yeah. 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 Because it's
Because we
cookie cutter.
it,
Yeah.
well, and we learn which big box brokerages promote which fund families,
Yeah. Yep.
you know.
Yeah, yeah, and it's great to have that freedom and look out for your client's best interests. And I know that's what you really focus on. So, to stabilize your retirement, number one, work with a financial professional. Number two, get a
A
plan,
fiduciary, a
a fiduciary.
fiduciary
A
financial
fiduciary. Yep. And that's the question you ask. Are you a fiduciary?
advisor.
And are you going to do what's in my best interest, not what's going to get you some commission somewhere or to push your particular product of the company you work for, right?
And when you are working with a fiduciary, make sure that they work with both sides of the investment world. Make sure
Hmm.
that they are comfortable in the insurance world and comfortable with market-based products, because there are people who carry a fiduciary license, who use that license to gather the assets and then move them all over into insurance products,
Yeah.
which is probably 99 times out of 100 not a suitable recommendation for you or for your money,
Yeah.
because when you're moving all into insurance products, you are taking away something very valuable, and that's your liquidity. The ability to grab a bucket of money when you need it, if you need it, without having to pay a penalty to have access to your own money.
Yeah. That's a great point. You have to have balance, you have to have growth, you have to have some growth, you have to have some
Mhm.
liquidity, you have to have some principal protection and money that's protected and will be there. And then you do have to have that money that if you need money, it's
Mhm.
there, right?
Right,
When
right.
you need it. Yeah.
Yeah, I mean, you're always gonna need to keep some money in the bank.
Yeah.
And then you need investments that are liquid and accessible. And when we're talking about managing your risk, when we're looking at what your spending is, what your needs are, we may move some to that safer side. Understand that we are trading off some of that liquidity for just those dollars, with the idea that we are creating another, like a pension or an income stream for you,
Yeah.
or creating some money that, right now, with the volatility in the market, that money isn't jumping up and down.
Yeah.
The worst we do is that you might not make as much interest this year. But I'm not sitting there telling you that you lost 10, 15% on that side.
Yeah. Yeah. That's tough.
And while
Well,
we're on the subject, I've also had people reaching out to me now that the market's down 10%, asking if we need to make a change. No, probably not, because our plan is designed for the long haul. It doesn't change direction with the wind.
yeah, and not on a weekly basis. You don't make changes
No,
on a weekly basis.
no, we don't want you to be reactionary about things.
Yeah, don't let your emotions get involved. And that's why, again, work with a financial professional who's a fiduciary, uh, because they will make wise decisions based on actual necessity and facts rather than emotions, right?
Right. Wall Street professionals thrive on you trading on emotion,
Oh, yeah.
because they go in and scoop up deals when you've panicked and decided that you need to move it to something quote unquote safer
Yeah.
after it's already
Yeah,
lost.
the average investor, especially those who do it themselves, I think it's a crazy number. Like 80% of them end up buying high and selling low,
Hmm.
which is the
And there,
opposite of what you should do.
and JP Morgan, I think, did a study that over 20 years, the average investor is going to net somewhere around 3% per year
Yep.
in growth. Where honestly, if you put it in an index fund and set it and forget it, you're going to do better than that over the long haul.
Right.
So, it's for the same reason that you wouldn't set your own broken bone
Right.
or do your own appendectomy. It working with a financial professional gives you the opportunity to work with somebody that is in the trenches and has seen a lot of these things
Mhm.
happen. Especially if you can find an advisor that was around in 2008, 2009, when we had the housing bubble burst,
Sure.
or going back even further to the 2001, 2000, when we had the dot-com bubble burst and then had 9/11 on the heels of that. Having an advisor who has some A little salt in the pepper, shall we say, except I pay a lot of money so that you don't see the salt in my pepper to have my hair colored, people. That's what we're
Oh,
talking
okay.
about here.
Oh, okay. You
Um,
lost me there for
yeah,
1
you
second.
you
Okay.
want you want somebody with some longevity and some experience.
Yeah. Yep. That's what's important. So before we go today, Barb,
Mhm.
let our listeners out there know how they can get a hold of you to set up that no charge, no obligation consultation.
They can reach out to us at anchoryourretirement.com or give us a call at area code 913-553-6222. Go to the appointments and scheduling line. Amanda will get you scheduled with either myself or one of the other fiduciaries in the office. And we will give you, first thing we're going to do is listen, find out what your goals are and what your objectives are. Then we're going to give you that color of money risk analysis to take. And then we're going to look at where you are currently invested and what you have, send it off to a team of CFPs that are going to do an analysis on it and give us the unbiased good, bad, and ugly about where you are. When we do that, we might find out that you're in a great place and you just need to stay the course. Or if we need to make some course corrections, we can then go out to the open market and find what suits you best rather than going with somebody who just has a limited line of what they can sell.
Yeah. Well, that's great. And again, that number that our listeners can call is 913-553-6222, 913-553-6222, or go to bgwealthmanagement.com.
Yep.
All right. Well, Barb, great show today.
Thanks, Tony.
Yep.
Hope you make it this weekend. I know that it's like, 70 today, and then it's going to start snowing
Yes,
tomorrow.
exactly. Exactly. It's
Welcome to
great.
spring.
All right. And that does it for today's episode of Anchor Your Retirement.